Hello, everyone. Happy Friday. Happy PCE Friday. How's everyone doing today? Hope everyone's having a good day so far. Good morning, John. Good morning, Sterling. Thank you for putting in the Lulu beat guided down. Nice little mini double top. Would have had to been traded after hours. But then with the guidance running back down to very key critical support. Oracle software contract entered by Pentagon. And I think you put in here about the triggered, where is that? Oddly enough, Oracle has a triggered daily weekly double top that would take it back to the 200 SMA area. Shocking how that could work. Good morning, Patrick. Good morning, Les. I see all your PCE stuff in here too. Good morning, Royal Palms. Good morning, McRangers. Just trying to make sure I didn't miss anything. Hey, Stafford, hope you are well. Nice to see you. Good morning, Harold. What's the lowest time frame you trade on? Well, that depends. I'll go down to a 5 minute if there's something like Fed minutes or something, or I'm trying to just get in on momentum. Other than that, I generally focus on 1 hour and above. But my time frames I use I go by the 3 to 4 degrees separation. So I use 5, 15, 1 hour, 4 hour, then it jumps to daily, then weekly. Sterling thinks I'm thinking about the effects of auto tariffs. I'm also 100% sure prices will not rise. Sounds crazy, but the manufacturers are making more per unit they ever have during the COVID. An example, our Camrys used to have 2,000 to 3,000 dealer cash per unit. They have had zero since 2021. Now, is that true? I know that Toyotas have been in super high demand. Is that true on other things also, non-Toyotas? So that's what I'm wondering about. And something, unless I wonder if it'll like Audi in this country, everything's 100% imported. So are they going to be able to eat every aspect? Because their margins aren't that high. Maybe Toyotas are doing well, but like Audi is not, from my knowledge. So it'll be interesting across the board. Good morning, Anissa. Which means that projected tariff per Camry is corrected 1,800. There's more than enough wiggle room for the manufacturer to absorb it, or it is very, very competitive. And I bet you Toyota probably can absorb more than some other people, but it'll be interesting to see. Good morning, Martinez. Good morning, Heinrich. All right, people starting to come in. It is true of all Asian imports. Where does Sterling? Where does a Toyota make most of their cars now for this country? What percentage is made in the USA? All right, well, we're waiting for that. Sort of get sidetracked. Good morning, Jacob. But it is going to be important to see what's going to happen now. We have core PCE prices. This ties into a bigger picture. Core PCE prices coming in at 0.4 versus 0.3 consensus and a prior of 0.3. This is all right. Again, you start annualizing this. We have the annual year over year, but you start annualizing figures month over month at 0.4. And a lot of this is due to services inflation, which is not going away. We are not seeing it in the goods inflation yet. So it'll be interesting to see what happens with the tariffs. And if we start getting pressure on goods and services inflation is not going away, now this is sticky. Now, if we tip into like a severe recession, yes, inflation will go away. It'll start dropping, but I'm worried if aspects of it still stay stickier than they want, because we could get into some more deflation if we got into a severe recession. But will that be enough to really knock out the sticky inflation? Because things are so out of whack. Personal income bouncing back to 0.8, coming down a little from previous. Previous was revised lower, I think, also. Personal spending also bouncing back, but lower than consensus. Price index month over month coming in at 0.3, which is consensus. Year over year, 2.5, the headline number of a core, bouncing to 2.8 year over year. Again, not near the 2. And if you annualize 0.4, that would be, 0.4 times 12. What's that, 4.8? So that's putting upwards pressure on this. Now, we still have the final numbers from March, the consumer sentiment and inflation expectations. Remember, these jumped big last time, so it'll see if we'll have to wait and see if that really sticks or if they come back down. So that's the next key number. Why are these times off? Why are those times off? I had it set to, there we go. There we go. I was like, those times are off because I've tried to do it off of East Coast time. All right, so 30 minutes after the cash open, we got consumer sentiment. Then we have Barr speaking lunchtime and Bostic speaking right around the cash closing time. So we have that going on. What else? Good morning, Jacob. The EU highline import cars have more margin than our vehicles, and cars is truly more money. It costs them more money they make. Interesting. Good morning, Daniel. All right. Thank you for all the information, Sterling. Sorry to not text you back yesterday. I know you did respond to me. It was a super hectic day yesterday for me. This morning, Oracle down. Wow. All your mega caps down except Tesla. So that's where that sits. Groups, let me just do a quick refresh since after the PCE numbers came out. We have technology, consumer cyclical, and comm services leading it down. So definitely a risk off day, using that term I hate. In terms of rate cut probabilities, because I don't know how the Fed aggressively cuts. They got to stay probably pause longer unless this is just a one-off and then we shift back down. But the market's still pricing in a cut in June, a cut in September, and now a cut in December again. Fear and greed still in fear. Schiller PE still mid 35s. Sterling put in the Lululemon information. Lululemon information. So that, and there's nothing this morning. All right. So let's see what we're looking at. By the way, if something turns around and we have a strong rally today, I'd be watching how we would close in relation to yesterday's high, but that would take a very strong rally. Something I guess would have to, I don't know what would trigger it. But if we continue a sell-off, 5,700 is key, the 50% retracement from this up move, and then 56.65 roughly on a closing basis, and that's where there's a lot of buying pressure. If we roll over the other way, sorry, I don't mean roll over. If we start to bounce, we had a little dip with the PCE numbers, but trying to make a little mini double bottom pattern here. So that will be valid going into the open. So that will be valid, and that could take us back to the 57.68 area. There's a lot of selling pressure between about 57.65 to 57.75. And if we look at the key retracement levels, you also have just above there the 50% harmonic. All right, 57.74. So on a rally, I'd be looking at about 57.68 to 57.75 as a major resistance zone. Okay, it really has to break above 57.80 before we can gain traction. And you see here we went into a clear path move, which is not a trade trigger, but we did break above key resistance and then abruptly got slammed back down yesterday. So I'd be cautious, if you're doing anything from the long side, if something were to trigger for me, I'd be aggressively looking at this area as to resistance. It's got a lot of pressure up there. Now, if we take out these double bottoms, again, 5,700, and we take out 5,700, if you look right here to the left, you don't have much support until you get down to this 56.65 area. It's really 56.55 to 56.55 is the key support zone if we start taking out the 50% harmonic. So that's a little more in depth than I normally go, but that's exactly how I'm setting up my thought process and what I'm looking for on both sides going into the open. Yeah, I took off I'm trying to keep the charts cleaner, and I have to do that for a reason. I have to do more screenshots for another project we're working on. So again, we have the double tops are still in play. Okay, the double tops are still in play. You see here, but you know they have not been invalidated on this bounce up. Okay, I'm just trying to clean up the charts. It was getting a little too messy, and even I was having trouble reading it intraday, and I'm sitting here right in front of the screen. So they are still in play, and also this double bottom is technically still in play for a final target if it does rotate up. I just took that off, and we'll have to see how this resolves. All right, the NASDAQ. The NASDAQ, come on, NASDAQ. There we go. All right. We're right now trading at the 50% harmonic after dipping between the 52 and the 62 and a half, but no close yet below the 62 and a half, roughly 19,800. That's what I'm going to be watching, which is also the bottom of this rising channel line. So that's what I'm going to be keeping an eye on to the downside. Again, that's very key. We start closing below this 50, it's really 57.92. We start closing below there. The next target for me would be 19,643, 19,650, and then 19,500 roughly. To the upside, we do also have a little mini double bottom, which could take us back just below a very key area and the top of the 4-hour rotation zone. You see, we spiked into it yesterday a couple times and rotated back down. So that's what I'll be keeping an eye on here. Again, to about 20,100 would be my top level resistance. The targets on that little mini double would be 20,032, 20,063, and then that roughly 2090. 20,090, right in front of that 2,100 level. So it's really going to be interesting when those consumer sentiment numbers come out, by the way. That's going to probably set the rest of the tone because we got PCE out of the way. The market didn't react. It had an initial reaction to downside, but it bounced back pretty quickly. The Dow, not much to talk about right here with the Dow. Besides trying to get a chart, you have, again, another little mini double. So that's what I'll be watching for right there. If the Dow does break down below that, I'm looking for support between about 42,300 to 42,350, and then we break below that major support, even going into next week, is 42,100. You have a little mini double here. So same story in all these things. If that were to trigger, it would take us back just under a very key resistance shelf. The Russell, we do not have a double in. We do not have a double in. So on any rally, the key resistance is 2,087, and then major resistance is 2,096, 2,097 area. Key support is coming in between about 2,061 to 2,065. The VIX, slightly elevated, but not much reaction. Not much reaction. If we start breaking back below 19, I'll start watching for some more upwards pressure. We start spiking back above about 1950. I'll start looking for more downwards pressure. The DAX still coming in on that 50. This again, very key support area. So going to be paying attention to, especially next week, to see how the DAX reacts and watch for rollover plays. The DAX is definitely looking like it's putting in a top after a massive multi-week run, then a sideways move back to the weekly rotation zone. So any bounce plays, I will probably start looking for rollover plays on that. The yield. The notes, surprisingly enough, the futures still caught in a range and moving up a bit, which means the yield dropping a little after those PCE numbers. So maybe they weren't hot enough. But yesterday we definitely closed. I'm going to then see today, especially I want to see this 4.3 level hold. If not, we could have got a false breakout to the upside, and we could then come back down and retest the lows. But I want to see how this closes today, especially after consumer sentiment numbers. Dollar index. Reversal yesterday off the first target. Little run up this morning, and then selling pressure in here. But the first target's hit on the double, and nothing else to do but sit on hands. Sit on hands. Crude. Crude has a little potential mini double top on the 4-hour basis against the second target of the double bottom. So that's the only thing I'm paying close attention to there. Otherwise, if that doesn't trigger, and that is against the 200-day SMA, which was prior support, becoming significant resistance. So we'll have to see. That's why this was my key target area for this double bottom. But from a trailing perspective, the only way I dump a position in this is if that double top does trigger, that 4-hour double top. Gold. Again, after yesterday's strong price action, the double top was invalidated and, of course, never triggered. And I got to redo my gold levels with this because we have a contract roll. So the levels are slightly off. Let me just redo this again. I should have done this before. Sorry about that. All right. So where does that take us? Where does that take us? Well, now, let me take off those. We've come up to another key harmonic area. And the next target, but this is getting very, everybody's going, it's getting way too bullish. So, and we're getting divergence set up. So my bullishness in the short term is waning and it's going into closer and tighter trail mode. Okay, especially if we were closed back below about 3,021. We're starting to get divergences set up. That doesn't mean this has to end. It doesn't mean I just bail on a position. But we're starting to get divergences on the weekly and the daily and starting to have very key momentum loss. So, and it's tipping little too bullish. Little too bullish, getting chased higher. So, just know from what time frame you're in. Like from a long-term time frame, we could easily get a much bigger pullback, even back to 3,000, which would take us back to the rotation zone again. That would not kill the bullish trends yet from a long-term perspective. But if you're in something from the short-term perspective, I know where your stops are. Copper. Also going to be watching now. We pulled back to the rotation zone. Going to be watching for the secondary reaction to see if we set up another major topping pattern against major highs. The yen, still building a base. Got first cross rotation zone. Tried to kiss the trend line away. I'm going to be watching if we can really break through this 150-120 area. Euro. After hitting the second target yesterday and reversing, which was also the 200 simple, reversing up, double is not invalidated yet, but paying close attention to the price action today. So what else we have? Spiders. Spiders. The key, again, I'd be watching the futures. Gap down today. What was yesterday's close? Jeez, I need to. Here we go. So 566.30, gap down from 567.08 yesterday. So that would be the first target there. If we take out yesterday's low, what was yesterday's low? 564.94. If we take out yesterday's low, I'd be looking for 563.04. To the upside beyond the close, I'm looking at about 570 as major resistance. The Qs. let me just clean up this chart too. The Q's gap down today, 480.68, close to where we're going to open. 481.62 is for the gap fill. And then you have some key resistance around 487 is major resistance area, 486.50 to 487. Very key support, 480. 480 is very key support. If that does break 476.63. Let's just take a look at a couple other things before I get, as Sterling mentioned before, clean up this chart. Oracle does have a massive lopsided double that triggered a couple weeks ago, went back to the weekly rotation zone, rotating down, now gapping down with the news of the Pentagon canceling the contract, and this could easily also close below 62.5. So the first magnet area is between 132.64 to 134.82, but this could easily return to the 200-week overall. By the way, NVIDIA also, yesterday we had that 4-hour double trigger coming down to the first target. The first target was hit yesterday after triggering back on Wednesday, which I posted on the X feed. The first target's hit, so it's definitely lower a stop on any shorts in NVIDIA. 70% of Toyotas sold in the U.S. are at least assembled here. Thank you. Good morning, PMG. Hello, Charles. Charles is short. It's crude. Everyone else needs to remember that the JP Morgan Chase collar gets adjusted. That's the big quarterly collar. That's their big hedge collar. And that does have market implications because it's put on in such size. So I do not have in front of me where the current one's expiring. Where the current one's expired, and they put on a new one based off the quarterly. Again, Monday is quarter end. So we're probably going to see some window dressing between today and Monday, especially on Monday. And I'll have to see where they're setting up their next collar. I do not have that information in front of me right now, but that is something to pay attention to. Trigger was on a 60-minute 2 standard deviation of 75% harmonic. Okay, there you go. There you go. And what else do we have to look at? That's what I think we're at. I'm trying to think. Tesla, by the way, has a mini double top pattern in it that is not triggered yet. Okay, so if Tesla rolls over again and closes back below 271.98, there is a double top pattern in play into a clear path move with a gap left behind. So that is also something I'm keeping an eye on right there. Other than that, I think that's good for today. Remember, don't fall asleep at the 10 a.m. Sorry, I was thinking Chicago time. The 10 a.m. Eastern time consumer sentiment numbers, especially the inflation expectations. Okay, double, little mini double on the 1 hour, which for me, if was going to be traded on a break, it would have to follow through with a 1 hour close above the peak. Okay, why? Because this could easily rotate that down on the 15-minute and turn it into a triple bottom on the 15-minute, which why any break would have to follow through with the 1 hour close above 57.40 roughly in order to see that. That's going to be very key level. All right. Oh, you're putting in that? On March 27, post on X, noted the S&P 500 magnet level is 55.65. 55.65 as the magnet level for that. 55.65. So that is a fair amount lower and would retest the low areas from a couple weeks ago. That would be interesting. All right, with that, I got to run into the open. I hope everyone has a wonderful trading day. Thank you for tuning in, and I will see you all next week. Bye for now.